Good morning. My name is Scott Rudd, the Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So the S&P closed above the $1,500 level, which is just one stop on that road to 1,700, Scott. So how do you navigate now?
Well, there's going to be many stops on this road to 1,700, and we've talked about the road to 1,700, by 2015. So the question is, when you go somewhere on that road too quickly, how do you switch gears? How do you navigate? Because everyone out there is talking about how overbought we are, how the RSI is screaming, how you have to wait for a pullback. But the question is, what happens if that doesn't take place? So you have to have like two plans. One plan of being involved in the market, and one plan if we do get that pullback, where potentially you could add to your winning positions and continue to navigate, because I do think overall we're going to be on that road to 1,700. It might be this year, it might be next year, but you have to have a plan on your time frame and how to enter and exit, so to speak.
So what are the levels you're watching in the S&P right now?
If we take a quick look at the chart of the spiders, you will see that we've been following this this road to first 1,500 very methodically. This was the beginning of the year. This was your gap up. Remember New Year's Eve when everyone was fear-mongering about the fiscal cliff, where we weren't even, it didn't even get reconciled yet, and then boom, we closed on our highs, and then here was your gap up. So within that gap up, you had about 4 or 5 days, 4 or 5 days of digestion, 4 or 5 days of healthy action that a lot of people were complaining about. Where's the volume? What's going on here? Meanwhile, we never filled this gap. And within this gap, you let the 8-day moving average catch up. And then we talked about the stair step higher. So here was, 4 or 5 days went higher. Then we built a new floor above the previous resistance that turns into support. 8-day caught up. Then we went up to this 1474 level. I beat this down as far as you can go. Spiders was 148.11. We not only went through it, but we closed above it, and then we extended. So now here we are. I would write down support. 149.37 was Friday's low. The 8-day moving average is now 149. Here is your next level of support. If for some reason something were to change, and we took out this, this trend we've been following in the 8-day, your next real big level is, 147.17, which is the 21-day, or at least, this 148.11, which was that prior high. But at this point, I think, we're methodically going higher. The trend has been pretty recognizable. So until that changes, just stay the course of action. Now,
the Fed kicks off its 2-day meeting tomorrow. Could we potentially see them throw us a curveball and actually weigh on the markets?
I think people are trying to figure out what's going on with interest rates. They've come out there and they've said, they're going to keep it low as far as they can go, and the market's almost like forcing their hands. When the market goes up, you've been seeing, TLT sell off. You've been seeing a little bit of a push up in the TVTs because, rates are almost rising on their own. So the question is, can they keep their heel on it, so this way they think the economy needs more time to recover, and that's what's going on here with that push-pull. And if you look right now at the TBT, for instance, you will see, this is going to be something that we are going to watch. You have a nice gap up from, Friday, and we're coming into these highs here, and people are looking at, I think, 2%, on that interest rate, and here you go. If we see 2%, you're going to see this go over 67.50, and I think this trade can continue. That started, well into December, but as of right now, there's no conference. Like they have, every time they do something crazy or something different, they have this big press conference. So I don't think they're going to do anything so, outlandish, but you might see a little language change, and then we'll figure out what the market wants to do.
All right, well, we're putting social networking stocks in the spotlight right now with Facebook's earnings. On Wednesday, the stock had great action last week, but is now at short-term resistance. So do you think it'll get above that level before earnings?
I'd like to see it just hang around right around here. We've had a really nice move with this stock ever since that 800 million shares, were supposedly unlocked and it was supposed to be a debacle. Well, it didn't happen, and the price action showed you strength. So if you look at this methodical move for Facebook, you'll see here, this was that day. This was when it ignited versus falling apart, and then this is when it technically got better, when it actually, look at that, started following the 8-day moving average. This was one level, 24.75. Went as high as almost 28 and change. You had a consolidation move to the downside, and then pow, another move to the upside. And then ever since the event, it's been consolidating. But again, look at the 8-day, the 21-day, been tracking it really well. And now you have this upper level or area. But the question is, do you take stock into earnings? Are you just trading it? Are you looking at the intermediate trend? If I were you and you were just a trader, okay, bullish on Facebook, do some type of call spread or do some kind of situation where your risk is premium paid. because you never know. Everyone's looking to see what they're doing with mobile. Can they monetize it? What are the growth numbers? Did they lose a lot of users, because of the whole privacy issue? And then people want to hear about what's going to happen with their new search feature that wound up not getting such a big reception. So at this point, it's come a long way, and I do think it can continue this year. The question is, what's it going to do this earnings report, and how do you handle it? For me, I might do a call spread. It all depends where we are on Wednesday. We have a lot of time between now and then. So a little rest in here would probably be good.
And LinkedIn earnings are coming up next week. The stock has been acting very well. Where's the next resistance level you see for it?
It kind of poked through it last week. We were talking about getting above 120. I think it closed almost near 124. And, to me, new issues that come public, typically after 2 years or 3 years, are very exciting because, some of the biggest winners typically come from new issues, from the prior 2 to 5 years. You saw it with Under Armour, you saw it with Lululemon, you saw it with Visa, MasterCard. You're talking about, names that have recognition, that have, not like, some are iconic. I wouldn't say LinkedIn's iconic, but, that has the ingredients for a major winner. And if you look at the chart here of LinkedIn, you will see that it's been consolidating really, really well. Okay, you look here, this is how long it's been public. It's, institutions, gathering it up within this big time frame. The float's really small, based on like the size of like a Facebook float. And at this particular point, look where we are. So if the LinkedIn report is good and positive the way it's been, and they show increasing metrics, which they have been, above this 125, 50, there's nothing in its way. And to me, I personally think that this stock could see 140 to 150 this year. How it happens, I'm not exactly sure. I will have some kind of option strategy going into the earnings. Right now, I'm long the option and the stock. And if we see a move above 124, 125.50 before earnings, I will probably add to it for some kind of squeeze because there is some short interest in there as well.
Well, Groupon's showing some consolidation right now, but it's had a very nice rally since November. What level would you say it needs to clear to pick up some momentum again?
Well, this has been, one of the biggest disappointments out there. But if you used a stop or you used some kind of system to get out of the way when it was showing faulty action, like some of the other social networking names, you have the opportunity around here to figure out if it could be like a trash for treasure trade. Meaning it's someone's trash if you held through it and you didn't honor your stops if you had them and this and that and you rode it all the way down. Or it could be now a treasure if you're looking at it technically and it could be reborn for a move off the lows like we've seen with some other stocks this year. So you look here at the chart, this is when it came public from the 30 level, and it has not been someone's treasure this entire way down. But now, down here, it's been acting a little different. Not a whole lot different, but you know what? It's been on the move from those lows. And I do see some type of inverse head and shoulders pattern right here where you have the left shoulder, here's your head, here's your right shoulder. So, above 550, you could see a gap fill up to the $7 level. So from here, if you want to go with a call spread, if you want to go with options, that's cool. Or if you want to trade the stock, close above this 550 with some authority, and then perhaps we fill that gap. And if you look at the longer term chart, you look where that is in the course of this month or the course of this stock move, and it's a big percentage gain from here, but it's nowhere where it came from. So entries and exits do matter, and I think that this Groupon is worth a look.
Well, ZNGA earnings are also coming up. This stock is the laggard of the group. It's really been under some pressure. So what do you make of its chart and where the stock is headed right now?
I think this one was it was so bad for the retail environment out there. Even I think people, the professionals, because everyone said, oh, Zynga's going to be 20 when Facebook comes out. And meanwhile, Zynga was for sale ever since it came public. And technically, there were so many signs to get out of the way. You look at Zynga here, the chart, you will see just, first of all, there was some nice action in the beginning, because look at this IPO. First there was nothing of interest to the downside, and then once we got closer to Facebook, it heated up, and there was a nice trade around here. And then all of a sudden, boom, look at this shooting star top. So right there, write that down, look at that chart pattern and study that, because whenever you see a open at highs, close near the bottom of that range after a big move, that right there says it's a sell signal, and a day to take notice. Sometimes they don't take it doesn't amount to anything, but if you notice it and you get flexible and you maybe get out, you would notice the fact that it then came in, you had a wedge here, and then boom. Now remember that secondary that it did around $12 and didn't hold that price? Another signal to get out of the way. And then look at this, new lows beget other new lows, and here was another one. So anyway, fast forward to where we are now. I know Mark is trying to see if he could, get some kind of nice bounce out of this situation, because he's looking for a trash for treasures trade. Let me show you let me get to where we are here. At this point, I don't see any true sign of it. Okay, you do have this, downtrend, so to speak. You have this big gap here. I've tried it a few times. I tried it on this day, and it didn't really work. On this day, I tried a little bit. So what this really needs to do is it's got to get above 275. It's got to get up with heavy volume and authority. Maybe it'll take earnings, but it probably will be, halted or traded after it. So at this point, if you want to have some kind of, again, call spread, because risk is premium paid, or some shares, it's risky, but if it gets going a little bit, it could see the 200-day, could fill this gap. And if you don't think ZNGA is going out of business, because that's what really the chart pattern's telling you, then down here, again, trash for treasures trade, but realize, sometimes trash deserves just to be in the bin, and it doesn't always turn into a treasure. So you just know what you're looking to get out of it.
All right, well, coming up, we're going to go in the trenches with high beta tech, but first, a quick commercial break. We'll be right back.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
We're back and talking high beta tech. At this point, Apple has dropped almost 40% since September. It's continued to show no signs of life after its disappointing earnings report, and the bears keep getting more and more outspoken about this stock. So, Scott, what do you think? Could this be a potential buying opportunity?
I think when we see that reversal, we'll try it again. And then once you get that reversal, you have to see a lot more conviction or commitment to it. And we've been trying to take cash flow trades out of this stock since the the big debacle to the downside. But every level it's shown no commitment. So if you caught nice little bounces or cute bounces, great. But really the trend's been to the downside. So you've probably been doing better if you're selling every rally. But if you're also out of the way, it's half the battle. And at this particular point, the stock has so much to prove, even down here. I think with a positive sign is that almost every wirehouse out there has now downgraded it the same way they all upgraded it at 700 or at 650 or whatnot. Down here they've all taken down their numbers, so maybe that means it could bounce. But again, you have to combine all worlds. If you look at the chart here of Apple, you will see here was that little head and shoulders top pattern. I think this is when it turned into a trade. When it broke the 21-day, we're like, okay, it could test a 50-day, but then once you get to the 50-day, you have to figure it out. And then at the 50-day, it broke that support, and then, the entire way down, it broke every moving average. If you do remember, you had a tradable move right around here. This was a nice little reversal pattern that wound up getting controlled at resistance, and then it tried again, resistance, it failed, and then this was your last earnings report that wasn't taken so well or positively, and now look where we are. We're right at that gap level that we talked about we could be testing when we're in here, but sometimes you never really think you can get there, and you know what, we're here. So here's a really big gap right now. Okay, it's probably going to play with it, toy with it. So for me, I'll tell you right now, this is what we could do. Watch this low here. Okay, watch 435. At this point, if you're short, you've made a lot of money. I would probably say cover a little bit. If it trades below 435, falls into this gap, and then comes back up with some authority, kind of like what you saw right here, potentially we get a little bit of a trade, especially if it, the next day you get some powerful behind it or some upside continuation behind it, and then you see if it holds here. So at this point, you see nothing. Just because the stock is down a lot, it doesn't mean it's a buy. Let's see what kind of situation we have with this low here, potentially for this action area. And some might be long versus this low, and if that's the case, just honor your stop, because if it breaks this, you do have this gap that sometimes do get filled, and what we call this is an air pocket. So at this point, if you've been long it and you've been sucking wind and going under, I don't know really what to tell you, except for you missed a lot of price points along the way. Hopefully at this particular point, as a trader who's been taking a day by day like me, I'm going to use this 435 as a pivot. I really think that it was 438.50. Not 435, but I was on the road Friday, so I'm not sure if that was just a misprint. So a zone, 435 to 438.50 is the pivot that I'm going to trade around it with.
All right, that's good key levels to know. And now on the flip side, Amazon continues to outshine the rest of the high beta tech group. It rallied 10 points on Friday, put in a new high. So is some digestion needed now?
At this point, if traders are riding this one, because this one's showing you the most relative strength, they've gotten rewarded. And sometimes it's good when you see some kind of methodical, technical move before earnings, because you just, if you were involved, you made nice money and you didn't have to hold through the risk of the report and go to options. So if you look here at the chart, you will see, this was that descending channel that was put in during the correction from September down to November, and this is when it triggered above it. All right, and then this one had the biggest move back to the highs. Okay, then you saw a little corrective action, and then right around here, it gapped up above the prior highs, and look at it now. Above all the moving averages, at historic highs. You look at the weekly chart, boom, it's been, if you're a stock picker and you're stuck with Amazon, congratulations, you've made a nice amount of money, and it's at historic highs. And at this point, with earnings I think are coming out on either Tuesday after the close or Wednesday after check, just be a bit careful. It's priced in a lot, but also don't be just short this one because, we saw what happened to the shorts in Netflix, which we'll get to. If you're looking to be involved in this one now, I guess if you're a long-term investor and you've had this for years, then maybe do some kind of collar where you sell some calls, buy some puts, get hedged, so this way you could stay with it. If you're just a trader and you haven't been riding this thing for months, then come up with a plan where your risk is premium paid. If you're looking for a call, an upside move, do some kind of call spread because the option premiums are nuts before earnings. And if you're looking for a debacle, don't go out short the stock. Do some kind of put spread because at least there, if you're wrong and it continues to the upside, you're not getting squeezed throughout a business break. You're just losing your premium paid. Or you could even do a straddle if you think there's going to be a hell of a move, but that's hard to cash in on because of the size of the premiums on both sides.
Well, you mentioned Netflix. Netflix, of course, had a huge rally on its recent earnings. Now, how do you handle that name coming into this week following last week's big moves?
I think people who just blindly even shorted it after the earnings got hurt. There was a big short interest, and people like, oh my goodness, look at Apple. It reported, $14+ in earnings, and this did 18 cents or whatever it was. But the growth numbers were there, and you have a tight float, a lot of shorts. A guy like Icon, big percentage holder, he filed, at some point a few months back, and it was on the highs. So it was showing you a little bit that that there's buying pressure there. And if you look at the chart here, again, as a trader, you don't have opinions and you treat it day by day. As far as this year's concerned, it acted very well. If you guys remember, we were trying to really look at this thing right around here. This was the first part of the move. Then it traded above this 80, and then remember, right around here, it had another move, and so technically it's been acting well. And then look at how it closed on the highs of the day going into earnings. So here was your gap up on earnings. So I said, you know what? Let's see a few days go by where we could trade versus the low. Here was your low, 139.62, and here was your high. You know what? It didn't wait. It traded but you don't have to know that this is going to happen. All you have to say is, okay, we get above the earnings high of 149.17. It could continue, and boy, did it continue. So now coming in today, same type of scenario, right down 172.68. So this way, at least you have a point of reference. If it were to trade above Friday's high today, you could see some continuation. But then if it trades through, comes back below it, and then you're looking for a cute short versus that pivot, and then make sure you honor that. Because if you look more on the daily chart, so to speak, look where this thing came from. Okay, this thing came from, what was this? The high here was 300. I do see some massive resistance, probably where the last time it broke down right around this 200. So I would just be very careful. Just because you might not be able to buy it doesn't mean it's a short, and just because it might not be a short, it might not be a long. So I'm going to trade it. It's hard to borrow. I'm probably going to say, give me a few thousand shares, just so if I see some kind of relative weakness intraday, I'll trade it short versus a level, just for a cute trade. And the best thing would be if it just hangs out 3-4 days flags, so then at least you have a tight entry. But again, the market's not giving everyone the best setup, so take what you get here.
Well, BIDU is taking a bit of a break here after the nice rally it had since December 6th. What are the key levels you're watching in BIDU?
BIDU was one of those kind of more, what's the word? It was another trash for treasure type of trade because it was so weak, not in the dog house like a ZNGA or a Groupon or some of the others, but it got thrown out the window with a lot of the Chinese names, when everyone was talking a hard landing, when, some accounting irregularities with other names, so everyone just throws them all in one basket. So meanwhile, let's just go to the chart and I'll show you what's taking place here. Okay, this right here, a lot of people ask me, Red Dog, what's a Red Dog reversal? Well, here's a Red Dog reversal. This was the low. This is when it broke below the most recent low, came back above it. Here was your pivot. So this was a nice little buy area. And then you saw some appetite. It held higher and then came right into resistance. So now I know some guys on the floor are trying to see if there's continuation here. And in order for there to be continuation, you need to see it break and close above this, just say 111 to 112. So the question is, can it continue? And some guys are looking for it. And I know I have no position right here. If I see heavy volume and it ignite above 111, 112, I'll be looking to buy it for a trade. Because this thing has been battered and bruised, and as we see, China's not having a hard landing. Google had a decent report, but you have a high, lower high, lower high. It's got to break this trend in order to get back in action. So I think, step by step, 111, 112 is that area, and if you've been trying to trade it prior to it, you're probably getting a little chopped up. So if that's you, I would wait for it to really get up and hold above it before you take any kind of size at least.
Well, IBM is holding above the big earnings gap as the 203 level has proven to be strong support. Would you say this is the new point of reference that we should trade against?
Exactly. Points of reference. That's all we have in this market. And for this one, it didn't take off like Netflix the day after, or even like Google, but it's a behemoth, it's a mega cap, it's got so many shares out there. So this one is actually giving you some time to feel a bit comfortable. I was dead wrong on this. I thought maybe that this chart could be in jeopardy after the last report, and you know what, it gapped up and it's holding higher, so I'm going to change my stance on it and see if there's an entry here, because I didn't enter it in the hole, so to speak. And if you played options on it and you had a put spread, you lost your premium paid, but whatever, it's the cost of doing business. So now here we are. This is the prior two highs, boom boom. Take a closer look here. This is your inside range. If you want to take this point out of it, which happened on earnings day, here it is. So if it starts getting above 205.18, perhaps nibble a little bit long, and then this is your next point of reference, which is around 208.58, and then you have the highs. At this point, you have a big gap. It's being defended, so it's showing you power. It's waiting for this 8-day to catch up, which is good. And then at some point, with the pressure or the upside pressure we have in the market, this IBM, I think, stays with it. And you go to the weekly chart of IBM, and you'll see, nice and tight. You have a nice channel here. It's been navigating for a while. All right, even though you did have a miss last quarter, and once you get above this area, it could be, what's this, 185 to just say 210. So that's about a 25-point move that could happen above 210, which puts a target for the year closer to 230, 235.
All right, well, time for some quick hits here. You touched on the TBT earlier, that this got back in play on Friday, broke out of its short-term downtrend. So where is next resistance?
I would say take a quick look at the chart. If the TBTs get above Friday's high, which was right around, what is this? This is 60, just say 67-ish. A move above 67, this peak here is 67.48. So 67 to 67.50 with any kind of authority, I think it's something you have to add to.
And Las Vegas Sands had a great run in the last few weeks, seeing some consolidation. Now, what level does it need to clear to get some momentum?
It's holding the 8-day. It's nice and tight again. It was better at the beginning of the year, but I think a little bit of a move above this prior pivot. You go right here real quick. You will see it's got to clear this 54 to get in motion. And real quickly, I'll throw MGM. Really tight. MGM's got to get above about 13.18.
And Mosaic had a nice breakout on Thursday and then good follow through on Friday. What's the next level to watch?
At this point, it's on its way. Jill, great call. You've been all over this. We've talked about it many times. Shout out to Options Profits. Two really nice days. The ags are also in vogue here. You take a quick look at the chart. I don't think you could enter it after this big move, but if you want a price point on where it can go, I think we've talked about actually, in my 2013 prognosis that it can get up into the 70s, and it just cleared a major level. So I think it's on its way, showing a lot more health in 2013 versus 2012. And
the GLD saw more downside on Friday, broke below the 200-day. Where's next support?
Next support is right around 158. It looked as if it was going to knock on the door of that descending channel. Couldn't get above 164 with the GLD. So I know for me, I got stopped out around 163-ish. Now, if you look real quickly at the chart, here's the big support in the GLD. Gold's been out of favor, out of play. I know gold bugs are bugging out a little bit, but it is what it is. Here's your descending trend line, which it couldn't get above, and now here's your support, and support comes in right around 158.80-ish.
All right, so if you can quickly tell us what's your focus heading into trading today?
Just another week of earnings. There should be some more rotation. There'll be action elsewhere. Every week there's a different set of action. This time it could be social networking. Again, keep tracking that 8-day moving average. Every time we get a little extended from it, it lets it catch up. Maybe, they shake the tree and we dip below the 8-day, which I think would be a gift. And that's when you look at the 21-day, and at the 21-day, that's a compelling area to start buying some things back if you sold some of the strength.
All right, happy trading, everyone. Have a great Monday.